Okay, so we've all seen it, right? That little buy now, pay later button from Affirm when you're checking out online. Seems pretty straightforward. But what if I told you that while we've all been looking at the button, Affirm has been busy building something way bigger and way more powerful deep inside the financial system itself? You see, the real war in fintech isn't just about showing up on another website. It's about who controls the pipes behind the scenes. So the question we really need to be asking is, where is the battle for buy now, pay later actually being won? And that quote right there gets to the heart of what we're talking about today. Affirm's latest moves, they're not about flashy ads or getting more eyeballs. It's about becoming the essential, invisible infrastructure of how money moves. They're becoming the plumbing. So let's break down exactly how they're pulling this off. All right, so the first piece of the strategy is all about winning at the point of checkout. But here's the twist. They're not just going store by store anymore. They're thinking much, much bigger. They're going after entire networks. A perfect example of this is their partnership with a company called Bolt. Now, Bolt isn't a store. It's a one-click checkout network that a ton of online merchants use. So when Affirm plugs into Bolt, it's not just one win. It's like flipping a switch and showing up across thousands of stores all at once.
And this really shows you how much the game has changed. You know, the old way was this slow, painful process, convincing one retailer at a time to add Affirm as just another button. The new model? Affirm becomes a default part of the core infrastructure. It's a total game changer for their distribution.
And this is exactly why the checkout layer is the ultimate prize. I mean, think about it. When you're embedded there, you control the distribution. You get to see all the transactions, which gives you the scale you need to make smart loan decisions. It's a huge signal that buy now, pay later is evolving from just a feature into a core piece of financial infrastructure that can be plugged in anywhere. But look, winning at checkout is just step one. To really become the plumbing, Affirm needs something that might be even harder to get, the trust of the old-school financial system. Their goal is to become the go-to official buy now, pay later provider for the banks themselves. And their big move here was partnering with Fiserv. Now, you might not have heard of Fiserv, but trust me, in the world of finance, they're an absolute giant. Think of them as the central nervous system that connects thousands of banks. When Fiserv makes a move, the entire industry pays attention. So why this partnership? Well, here's the really interesting part. Banks are kind of quietly admitting that they just don't want to build these buy now, pay later systems themselves. It's super complex, especially getting the risk right on all these little loans. So what do? They're outsourcing it to the specialist they trust, and that's Affirm, who's already proven they know how to do it. And this is the key takeaway for sure. The Fiserv deal isn't some clever marketing gimmick to get a few more users. No. This is a massive stamp of approval from the establishment. It's the traditional banking world looking over at the fintech space and saying, you know what? You do this better than we can. We trust you. That is a huge, huge deal. Okay, so Affirm has distribution through checkout, and now it has trust from the banks. But all of that is totally useless without the final, most crucial piece of the puzzle. Money. They have to prove that the capital engine that actually funds all of these loans is still humming along.
With interest rates going up and the economy being, well, what it is, there's been this huge question mark hanging over the whole buy now, pay later industry. Will the big money investors still want to buy up these consumer loans? Well, a recent deal just answered that question with a very loud, very clear yes.
And here's that answer in numbers. A company called Pagaya, which helps package and sell these loans to investors, just pushed through a deal worth nearly $720 million. I mean, that is a massive vote of confidence, showing that despite all the uncertainty, the capital markets are still very much open for business.
So how does all this plumbing actually work? It's simpler than you might think. Step 1, you buy something, and Affirm gives you a loan. Step 2, a company like Pagaya takes your loan, bundles it with thousands of others, and packages it up. And step 3, big institutional investors come in and buy those packages. That's how the money flows right back to Affirm so they can issue the next loan. And let's be absolutely clear on this point. This flow of capital isn't just important. It is everything. It is the oxygen that keeps the entire buy now, pay later model alive and breathing. Without it, the whole system just grinds to a halt. So that massive Pagaya deal, it proves the oxygen is still flowing and flowing freely. So, we've looked at the 3 critical layers here: the checkout, the banks, and the capital markets. Now let's tie it all together and see the real power of this plumbing strategy.
This table really lays it all out perfectly. You've got the Bolt partnership for massive network distribution, you have the Fiserv deal, which brings that crucial institutional trust, and you have the capital markets, proven by the Pagaya deal to keep the money flowing. It's not just three separate things, it's a flywheel, where each piece makes the others stronger.
And that's really the big story here. These aren't just three random partnerships that happen to work out. No, this is one cohesive strategy. It's about Affirm deliberately moving away from being just a consumer brand and embedding itself deep into the financial infrastructure, because that's where the real long-lasting power is built.
Which leaves us with a really fascinating final question to chew on. As Buy Now, Pay Later becomes less of a button you choose to click and more of the invisible plumbing that powers everything behind the scenes, who's really in control of how you pay for things? It's a pretty big question, and one worth thinking about.